Hello and welcome to Joe and Paul's Another Mining Podcast. With me, your host, Paul Harris from Columbia Gold Symposium and Mining Journal, and my co-host, Joe Mazumdar from Exploration Insight. Hello, Joe.
Paul, how's it going?
Very well. And we've got a very exciting podcast today in what's going to be a very special discussion about mining in general, M&A, strategy, all good things such as that. So let's start off by introducing our guest. We have Lukas Lundin, the father of the Lundin Group, and Jack Lundin, president and CEO of Bluestone Resources. Good morning, guys.
Morning. Very nice to be here.
Thank you. I think it's perhaps worthwhile starting off with let's a bit of an overview of the Lundin Group and how it came about and some of the different companies and assets that you have.
Originally, we acquired large assets in unwanted countries, and we did the feasibility to drill them out and sold them on, like we did with International Mustard of Mount Isa Mining. And then we saw an opportunity to buy assets that are not wanted by the majors. We bought Zinkgruvan in Sweden from Rio Tinto and added some other assets in Nueva Escobar in Portugal, and kept adding assets in Chile, Candelaria, Eagle in Michigan, and all that. We were luckily, fortunately, at the right time, assembled enough operation mind to create a mid-sized mining base metal company. So we originally started off not being operator or developers, but acquiring large assets that were not really wanted by other people, and they were bring them forward and sell them. And now the combination is of producing, developing assets, more mature companies.
Lukas, just a question is that when you're looking at buying these assets, which are unloved, let's say, or undervalued, like Chapada in Yamana that you purchased, or Candelaria in, I gather that was Phelps Dodge at that time, is it how much is it like your view on the commodity in the cycle and being exposed to nickel, copper, or whatever, and how much is it that this is misvalued in the portfolio, a willing seller, and how much is it that you're thinking, well, geopolitically, this is an asset that's getting very highly undervalued because it's Ecuador, because it's Argentina, or it's because of the DRC, or is it a combination of all three?
It's a combination of all three, and also we've had a lower metal market for a while. So, we got Canada with from Freeport because they were heavily indebted when they merged with oil and gas. So they had to sell assets. An opportunity came up to be able to buy it. Today, trying to buy Canada would be impossible. It's full right copper, nobody will sell it. And same Eagle was a small asset for Rio Tinto. We bought that, the nickel asset. Nickel price has been weak, and it's another asset disposed as an opportunity. Today, I think it'll be much harder to buy producing assets. Today, if you're going to build a company, you probably have to build assets yourself, build the mines. Trying to buy long life producing base metal assets is very difficult in this market.
Do you see, like in terms of the development, at least with some commodities, we see a paucity of development projects, and then changes in geopolitical risk or taxes or royalties that we're seeing in Chile and Peru? Do you see opportunities there when people are pulling out or holding, putting their foot on the brake?
It's even a large asset with unstable tax regime, nobody's selling. But I see an opportunity like across the board in Argentina, which I've been now for 30 years. We have found some major copper gold assets, and we just had an extremely large base metal discovery, one of the biggest in the world in Filo. And I think I see opportunity in that country to advance, get a better mining laws for us, and better way to develop the project, because the money Argentina needs foreign investments. I think it's a good opportunity in that country to move forward quite quickly.
And when people look at ESG and social governance, you guys have been involved in that for a long time. By building something in Ecuador that Kinross couldn't believe that they didn't want to build, and Michigan itself isn't an easy place to build either. So how much time or resources do you spend on getting the local stakeholders involved and
I
getting the
think
builders?
it's extremely important because nowadays you couldn't build an asset or operate an asset without the social license. You have to spend a lot of time. The social license that's as important when you get an operating permit. If you can't make sure that the local region you have involved aren't benefiting, you can have big problems. Social license become more and more important every year, so we spend a lot of time on that.
All right. Well, you've got a limited amount of time here, but just to leave it with, what do you see going forward for the Lundin Group, given the current environment? Like you say, valuations are pretty high, and you don't see a lot of people selling. And you're saying basically the only way is development through exploration, then development. Is that what you're seeing?
Yeah, or advanced. We involved with some company like Jose Maria and Philo, which are super advanced projects. So we can. Because the problem,
Uh-oh.
if we start drilling and finding, if we start building, it's going to take at least 10 years. So we can find more advanced, projects to have a linear ore body and move forward. I'm very bullish that this cycle is going to last for at least 10 years or more, but still, we need to jump a project that have done some work. Just pure greenfield projects right today be very difficult to move fast enough for the demand of the copper.
All right. Well,
And don't forget to give about Bluestone as well, because this is a Bluestone promo as well.
Oh yeah, Bluestone, of course.
The Lundin Group's migrated to actually developing and building the projects out as well. Obviously, Fruta del Norte, Lundin Gold, Jack, you were part of the team that built that, and now the group is looking to do that again, potentially building out Cerro Blanco in Guatemala. So that's quite a big sort of change in direction, isn't it? Or change in strategy, changing skill sets and things of that nature. Quite a sort of different business to be in some ways.
Yeah. It's a lot, I think if we can find very good assets and put them in production, I think we can create more value by building and selling. And Bluestone, especially, we acquired, we thought it was an underground project. We looked at it, looked quite difficult. And then we looked at the open pit project, and that becomes a really good project. Now you're talking 3 million ounces of 1 gram, 1.5 gram at surface, and a mine is going to produce 200,000 ounces a year. And that's fair size. So that project is going to become very, very exciting by changing the mining method. So we had to do some hard work, and then Jack's going to have some hard work on our local stakeholders and social license. Is going to be super important in Guatemala. I think the Guatemalan government itself is very pro-business. Just educate the local population.
That was very important in you guys thinking about going from the underground to the open pit. Was the change in the government? Was that key?
Yeah, we went to sort of present and explain it because to have a not best experience with the mining industry in Guatemala, so they're a bit nervous. So we had to really explain to him what we're trying to do and get his blessing to do an open pit. And I think we got his blessing. Now we just have to make sure we get the local communities on board, and then they can get all that done. Then it's an amazing project.
Just in a bit of background, like we the elephant in the room is ESCOBAR and and the Tahoe Resources debacle. Having Pan American now as the owner of that project and the way they handle ESG issues, is that helpful to you in terms of advancing Bluestone, to know that there's another company in there that's got a solid reputation?
Yeah. Super advantage. They're good guys, and I think ESCOBAR is a great asset. They have some local community issues, and most of the time, it's not only the company, it's not only the country, it's the company and the country, because sometimes we goof up, and the best thing for us is run around and blame Guatemala, which is not, maybe they have to look at ourselves. So it's like Ecuador, Kinross blame Ecuador. At the end of the day, you can sit down and do a deal with Ecuadorian, and we got it done. So it's a two-way street.
And another aspect that the Lundin Group has, you've got the Lundin Foundation, the charitable foundation, able to come in and support and augment and the ESG, the social aspects. The company does stuff and the foundation does stuff. To what extent is that an advantage when you're sort of dealing with governments and host communities in countries such as Ecuador and Guatemala, which perhaps haven't had the best experience with mining companies in the past?
I think it's been a big advantage, especially in Ecuador. We set up purchasing. I think before we start building, we won. I think in the GDP, the local economy was $66 million. We spent $22 million a year before we start building. In the local economy, and trying to get local purchasing. Train local people, and to be able to provide basics for a mine, the different food products and milk and meat, so I think if if everybody sees that they can benefit from the assets we develop, and not only just the federal government, it helps a lot. And I think Lundin Foundation is very helpful.
All right. Well, why don't we make that transition into Bluestone now? Thank you very much,
Thank you,
Lukas, for
guys.
joining us.